For those of us who are passionate about Tesla and want to know how many shares we'll need to retire and enjoy Mai Tais in Honolulu in 2030, Gary Black has projected the price of the company by 2030. For all of us Tesla bulls, Gary's knowledge is a great eye-opener, and the more you go into his model, the more incredible things become. I'll explain in this video why Gary's model is far too cautious, and despite its initial seeming optimism, doesn't fully account for Tesla's potential. Retiring will require fewer shares than what his model suggests. Watch to find out why Tesla will surpass Gary's forecast by twice. But before we go into the conversation, please give us a thumbs up. And all of you Tesla brothers, subscribe. Let's take a look at Gary's top secret forecast for what Tesla will achieve by 2030. Bear in mind the following critical parameters as we review 1. Price of Tesla shares, 2. Rate of Tesla deliveries, and 3. Rate of EV adoption. In order to make his projections, Gary considers several metrics. First, let's focus on the larger picture, the price of Tesla shares. Gary thinks that by 2030, shares will only be worth $269, but the tale is far more complex than that. We'll investigate the specifics first, then return to that. Examine the yearly delivery rate, which is the second measure. Gary projects that by 2030, Tesla will have tripled its current yearly supply rate to 10.8 million vehicles shipped annually. As most of us are aware, Tesla has the capacity to easily quadruple its current delivery rate of 10.8 million units by 2030. Therefore, this estimate is actually rather cautious. Let's now discuss the most important factor, the rate of EV adoption. By 2030, what percentage of the car market will be made up of EVs? According to Gary, the percentage of EV adoption rose from 3.4% in 2021 to 10% in 2022, then to 16% in 2023, 24% in 2024, and so on until 2030, when it will have reached 60%. Put another way, he projects that by 2030, there will be 54 million electric cars on the road worldwide. According to him, 20% of the 54 million EVs that are expected to be produced and delivered in 2023 would be Tesla vehicles. Throughout his forecast, he consistently states that Tesla will account for 20% of the worldwide EV market. The figure doesn't change between 2024 and 2030. Nevertheless, it seems to me that Elon is anticipating much more than just holding a 20% share of the market by 2030. Like him, I and other Tesla supporters concur. I'm sure there will be new rivals along the way, but when you think of EVs nowadays, there isn't a company that even remotely compares to Tesla. Thus, once more, Gary is taking a very cautious approach. Instead, I would point to Tesla's 40 to 50% market share in EVs. I believe Gary Black makes some inaccurate predictions, and that he may even be overly optimistic given that he believes the average price of a Tesla will be $65,000. Although I understand that inflation may alter our impression of what is normal to pay for a car, I believe Elon is genuinely trying to cater to a wider audience, which includes middle-class consumers who are willing to spend no more than $40,000 on a car. Gary also has high expectations for Tesla's 32.8% gross margin in 2030. I hope he's correct in saying this is really efficient. Now let's examine some reasons why Gary makes assumptions that are simply too conservative. The model's primary flaw is that it solely takes Tesla's car manufacturing into account. The fact that Tesla is actively working on clean energy, robot taxis, Tesla bots, and Tesla insurance cannot be explained. Given the limited scope of autos alone, he is cautious in his projections, but his projected annual growth rate of 47% is still significant. You may have observed, however, that the P ranges from 6.1.2 in 2022 to 6.4 in 2030, reflecting a Tesla price of $269. He isn't forecasting this as the PE for 2030, of course, is 6.4p. In 2030 doesn't seem plausible to me. However, the $269 price of his Tesla represents the P. Assume that by 2030, Tesla stock is valued at $269 and the company is earning $42 per share. At that point, the price to earnings ratio might approach 6.4. That's the method he's using. Later on, we'll explain or make educated guesses about the stock price based on his chart. Gary's model anticipates fairly good yearly growth rates of 45 for deliveries and 44 for EV adoption. That's the last thing I'll say about it. Now let's use Gary's model as the foundation for our own analysis. Gary's approach solely takes into account vehicles. As we stated previously in the video, it is entirely impossible to expect Tesla shares to fluctuate between $269 and $270 per share between 2022 and 2030. The model's prediction that Gary will see a 14% growth in Tesla's share count from 3.1 billion to around 3.6 billion in 2023 is another ridiculous aspect. And by 2030, when his scenario concludes, he will have 4.5 billion outstanding shares. The strategy of stock dilution is illogical, and I believe a significant repurchase is imminent, which would lead Tesla to issue fewer shares rather than more. It's just not adding up. It is ludicrous if Tesla still has to dilute in 2030 while generating over $200 billion in net profits. Simply put, they are stealing money without any justification. With net earnings of $200 billion, they ought to be repurchasing rather than diluting. However, we have to remember that this is just a prediction, and it appears that Gary Black is once again being cautious. The individual has solely invested in automobiles, hence, shares outstanding and shares of the illusion theory may make more sense. The stock price remains constant, but the market capitalization continues to rise. Let's expand on our discussion of stock pricing. Again, the stock price in 2030 is $269, but only as a result of his peculiar method of calculating PE. Black begins to make sense when his stock price projections are based on a realistic PE. For instance, Gary's model produces $552 per share for 2023 when utilizing a 69 PE, which makes reasonable given Tesla's $1.9 trillion market capitalization. Put another way, Gary Black estimates that the company might trade at a price objective that more than triples the firm's present trading price in 6 to 12 months, which isn't too bad. Let's examine 2024 at 69p in 2023, using a reasonable P of 55 given the market capitalization of $2.54 trillion. The cost per share would be approximately $632. Given that Black has just taken into consideration Tesla's vehicle production, $45 billion in yearly compensation, and a $2.5 trillion market valuation seem like achievable goals. Hence, $632 per share in 2024 seems like a fair deal, doesn't it? Here we are in 2025. The one thing to remember, in my opinion, about the 2025 share price is that Gary has Tesla's earnings completely, crushing year over year from $46 billion to $66 billion in a single year, an increase of $20 billion year over year. Amazing. And the PE will decline dramatically following such a large increase. In light of this, the PE for 2025 would be 45, which would result in a stock price of $720 and nearly approach the $3 trillion market cap mark in that year. Let's go on to 2026 now. I'm going to assign it a P of 40, which will result in a stock price of $832 per share. In 3 years, an amazing 4.5 times increase. And that just applies to cars. And once more, the conservative nature of all these computations is being attempted. Let's now add FSD to this to make it a little more realistic and bullish, in my perspective. Given that FSD prices are rising, let's determine the average cost of an FSD vehicle in 2022 to be $12,500. This month, they went up to $15,000. A lot of bears believe that in 2030, FSD won't be worth $29,000. In 2020, a base FSD cost $8,000. The initial $8,000 sum has been increased to $15,000. In the coming years, I would predict a doubling, and by the end of the decade, a quadrupling. However, $15,000 is a fair price for Tesla, so let's stop there. We will utilize the data's estimate of a 48% profit margin and sales of over $2.5 billion in FSD to predict that the FSD profit margin will exceed $1.2 billion in this chart, as it is expected to expand by 2% annually. The net income will increase by an additional $2 billion to $15 billion, or $303 per share with a P of 61. Therefore, after FSD is included, the stock price could rise significantly, reaching $625 in 2023, $729 in 2024, $834 in 2025, and $972 in 2026. But in 2030, when the company's stock price hits $1,282 and its market capitalization approaches $6 trillion, things really get insane. That's correct, folks. The value of our cars alone has already increased by $10, $15, $20, and $30 each share, and FSD is allowing us to add an additional $230. That would be amazing, I must say. However, there's more. By 2030, if the current price of Tesla stock at the time of recording stays at its current range of roughly $133.42, you will have experienced an incredible tenfold growth. I'm not sure about you, but I think it's a good idea to buy all the Tesla stock, guys. Knowing this makes the Mai Tais on Maui appear much more authentic. Once more, these are just projections and nothing in the world of investing is certain, but overall, I think it looks promising. Gary Black estimated $550 per share in the upcoming 6 to 12 months, based on a P of 69 in 2023. See if this comes to pass. This market is awful as a market. We might get better and make it to $500 or $412 months. However, this is comparatively low when compared to $550. To sum up, assuming a price to earnings ratio of 25, the market cap of cars is predicted to surpass $1,000 per share in 2030, a fourfold rise from its current level. By 2030, we increased the share price by $230 and included FSD. Additionally, we included robo-taxis and Tesla insurance. Though it's been a while, hopefully this was very educational. How does Gary Black's analysis sit with you? Do you think it makes sense? Tell us in the space provided for comments. We appreciate your time, and we'll see you in the next video. Music.